following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. I'm laughing so much, folks, because in the den, right, of course, we had a trading room, and it's great. But bottom line, I thought a couple of the Tigers were actually kidding, that they were saying that there's a new gas stations and pot stations out in Colorado that are called Gas and Grass. Yeah, gonna love it, man. Let's take a look at one of our 4 agreements. Don't take anything personally. Your truth is personal to yourself. Your own opinions and point of view reflect your own agreements and are personal to you. It's no one's truth but your own. Market-wise, let's take a look at it out here. We have the Dow Industrials down 52, NASDAQ off 14, S&P's down 11.5. Gold contract trading up $8.60, trading at $12.57 an ounce. Silver up 8 cents, $15.95 an ounce. Copper up 2 pennies, trading at $3.05 a pound. Light sweet crude up 53 cents, $57.12 a barrel. Notes. 10-year note, down 2 ticks, 124.17. 30-year bond, up 13, trading at 154.03. King dollar down, up rather, 31 ticks, 93.05. The euro's trading at just about 118 to the U.S. dollar. The yen is at 112 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. What's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We go over and take a look at the SPY. What we have with the SPY is that yesterday, bottom line, got up into the high, failed on price, failed on volume. You're coming off this baby, and we'll see what kind of juice we have on the way down. Right now, you're 265.92, and you know, once you get back inside the basically the 266.80, it's like, okay, now the high volume low from 2 Fridays ago is game. That high volume low is 260.76. We are coming into quad witching tomorrow, so you're going to have volume in this market tomorrow. NDX 100, same setup. Now, the NDX 100 has had a hard time holding a bid going all the way back from its high of the 28th of November. 28th of November, 156.69. Bottom line, keeps trying to get up there each and every day, fails. Looks like we're going to have another failure today. We got the 156.66. Bottom line, you're rolling over. It looks to me like what this wants to do first is come back down to the lower end of this consolidation, which is the 152.06. If we go inside the NDX 100, we look at the strength versus the weakness. Strength out here today is Priceline. Priceline's up $18. You get Amazon up 9. Google's up 8. Fox is up 2. Taken away from it, you got Intuitive Surgical down 9. Biogen is off 8. You got Regeneron down 4. That's quite a turnaround for the biotechs, because the biotechs had some strength. Let's look at Biogen for a second. Yeah, so you know, Biogen yesterday goes from 327 to 330, 332. Gives it up today. It looks like, you know, it got into its gap, and bottom line, can't handle that gap. So 301 is game. Inside the Dow Industrials, the strength versus the weakness out here. And the Dow Industrials, they've had quite a price move out here today. The weakness inside the Dow is United Health. That's down. That's putting 19 negative points into the Dow. Caterpillar's putting 14. Johnson & Johnson's putting 7. Putting positive points in Disney. Disney's putting 25 positive points. Boeing's putting 11. If we do go over to Disney and we take a look at Disney, let's start getting some good traction. Intraday out here today, what you had is that Disney bottom line opened almost flat. At let's see, at 11 o'clock starts moving. 107 up to a 111, and that has some strength behind it. Let's put this on a weekly. Yeah, even on a weekly. You know, now you're going to make a run for the top of the consolidation. And what Disney did do, Disney is buying the assets of 21st Century Fox. The assets they're buying. They're not buying the... well, here, let's see what they said there. Disney is keeping an option open regarding European broadcaster Sky. Disney is seeking to absorb the British pay TV company as part of its $52 billion purchase of assets from 21st Century Fox, announced Thursday. The deal assumes Fox, which owns 39% of Sky, will win UK approval for its approval first for its bid for the rest of the satellite provider. They've been trying to buy that forever. That's the bottom line. Should Disney only get Fox's existing Sky stake, the Burbank, California-based entertainment giant doesn't believe it's obligated to make an offer for the rest of the broadcaster, according to the UK takeover panel of British Authority. Bottom line is that you get some traction there. What Fox did keep, which I think was really a smart deal, is that they kept the real estate, folks. They kept, they sold them the asset. They kept the real estate. Not only just the biggest one, of course, is 21st Century Fox in Hollywood. That is a monster. When they first sold Century City, which is a major city now, that was sold off when they were filming Cleopatra because they were running out of money. And if you've ever seen Century City, it's a real city. Bottom line is that real estate's worth a fortune. So we go take a look at the gold contract. Actually, let's go to the GDX. Gold is still catching a bid out here. GDX, nice setup here. You pull back to $21.80. You're at $22.73. Yesterday we went topside with 82 million, just laying here with 24. That's what you like to see. We go take a look at the Anico Eagle AEM. AEM out here is trading. That went down to 42.01 today. That's trading 42.92. And this is a nice setup. You know, about time. That's the other side of it. An Eagle had gone from $51 down into the $40 price point. That took about 4 months, and now we'll see how it handles it as it starts moving to higher price. This consolidation has been on since October of 2016, so that consolidation has been quite some time. Notes and bonds. This is just a non-stop deal, folks. They want higher price, you know, and they're going to get it. And the way that they're charging forward right now, it looks to me like we're going to get it real fast. The 10-year note rejected lower price again after having a huge sign of strength yesterday. It's going topside, folks. Stay right there. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials are down 55. You get the NASDAQ off 12.5. S&Ps are down 17. Let's go over to our man, Mr. Andy Hecht, as we do every Tuesday and Thursday. Don't forget, folks, right here at TFNN, Andy's got a great show, 5 to 6 Eastern Standard Time every Tuesday and Thursday. And as you're coming over to TFNN, folks, bottom line, check out Andy right on the front page, subscribe a special, because if you test drive either one of his newsletters, you are going to get the 12 essential lessons for trading commodities. Okay, great course. Bottom line is that September, he had done commodity markets and demographics. October, market breakdown, physical derivative. November, overview of the market structure. December was backwardation and contango. And guess what? We're coming into January 2018, and you're going to have term structure. So if you test drive either one of his newsletters, you're going to get this whole course as long as you're still on that newsletter. You basically test drive a newsletter right now, you're going to get 4 months ASAP right in your mailbox. That's one beautiful thing. Andy Hecht, what's going on?
Oh, how are you?
Hey, we had silver and gold save themselves. They're jumping over that cliff, man. They just saved themselves.
You know what? They did. They did. And it was a classic kind of sell the rumor, buy the fact, and going into the Fed meeting.
Amazing. Absolutely amazing.
So, I mean, I really liked that silver led it out. You know what I mean?
Listen, no doubt, man.
That was good. And I think we might have seen the lows for the year. Not that they're going to run away on the upside, but, we definitely got the December curse. No question. The first half of December was rough in this sector. But, now the Fed meeting is done, you probably see stocks are going to rally.
No, listen, technically it was a perfect setup. Yeah. That is always dangerous, folks, when that happens, because it's like, really? You came down, you tested it, it was lighter volume, you went into the July lows of last year with dramatically lighter volume, and you took off with volume. That's what you'd like to see. So, as Andy would say, it doesn't mean we're going to the moon, but it does mean that you have strength in the buyers in that market. That's
right. And I do think, 1238.30, which was the low from yesterday before the Fed announcement, got a pretty good chance of standing as the lows,
Well, it'd be cool. Let's do this, because we did this last week. Remember, you were walking me through the December lows. I'll put the continuous contract up. Right. In the gold market, folks. And what we're going to have here, if that's the low, it's going to be cool, man. This is going to be a higher low. You know,
it'll be a higher low.
Right.
Exactly. And that's what we've been seeing in gold since December 2015.
Yeah,
So
exactly.
it'll be a continuation. Now, silver violated it, but silver violates everything, Tom.
It does. It does.
So does platinum. I mean, these are crazy markets. Gold is really the most liquid. It's the one on a technical basis you have to watch the closest because it does the best technically. Silver and platinum, they just like to stop people out. They stop the shorts out. They stop the longs out. That's what the thinner markets tend to do.
So platinum's at 882. I think I'm gonna.
I still like that. I'm a glutton for punishment.
I am too, man. I agree. It's
suffering. Speaking of suffering, natural gas. I'm still suffering there, and I have to tell you, I still believe, Tom, it's just too early for this price carnage here. Today the EIA came out, 69 BCF withdrawal.
Yeah.
And the price hasn't gone up. It hasn't gone down that much. I made a new low with sitting below 270. I tell you, I think the shorts in this market eventually get barbecued. But, it's going to be a lot of pressure until they do.
Yeah. And, you got to the 265, and we're so close to that. I think the number is 252 with those last two swings.
250, 220. Yeah. 250, 220. That's the big number there. And you know what? I could see this thing going down and testing 250 and then it going around.
And spiking it. No, exactly.
This is just the way these markets trade, these very highly volatile markets. But the figure today was about 4 BCF more than the market was expecting. So
right. And that's not, they're looking for a lot more than that, I think, right?
Well, they were looking for 65 BCF, nothing special. And the shorts keep pushing it. That's it. And we'll see what happens there. Meanwhile, crude oil's sitting real nicely. $57 a barrel, not going on. I'm sitting here writing an interesting article I wanted to talk to you about a little bit. And it's kind of about 2018 and this Aramco IPO that's supposed to come to market.
Okay.
So check this out. They haven't even named the stock exchange they're going to put it out on yet. The Crown Prince has said that he believes that the valuation of Aramco is like $2 trillion, which is ridiculous. First of all, I've seen other valuation models that say it's worth $400 billion, which is less than some BP. You have to remember, there's a lot of political risk in terms of oil production in Saudi Arabia.
Sure.
And I think that the realization that they're not going to get, a $2 trillion valuation, or maybe even a $1 trillion valuation, might have led to this purge and the kind of extortion of some wealth out of some, to build their sovereign wealth fund.
Well, they had to build it up because they were down to like, I don't know, was it?
Right.
It was still big money, but they were down quite a bit because they have to push so much money out to their populace so they don't do an uprising, right?
Right, exactly. So here's my point on the IPO. It doesn't matter what the valuation is, even if it's $400 billion. The Saudis are crazy. They should be selling 49% of the company.
Yeah.
They'll still own a majority stake. They can pocket $200 billion. And probably more. It's probably worth more than $400 billion.
Yeah, the banks are going to get up higher than that. The banks have an incentive to get it up.
But my point is the following. They should do it Jack Ma. Jack Ma, when he first floated Alibaba, he put it on the Hong Kong exchange, right?
Yeah.
They got a valuation, huge valuation. All of a sudden, the stocks tanked, He bought it all back, took it private again.
Right.
The Saudis should reserve 50% of their 49% sale for the time when oil goes down again, and they could buy back Aramco at a song. That's what they should do.
Well, that's what they might do. I mean,
right. That's what I'm thinking. The strategy's got to be there.
Well, it would be there if, we know oil will end up crashing again. It's cyclical anyway, right? So the real question is going to be when it crashes again. Let's say 4 or 5 years, whatever that is, right?
Next recession.
Yeah. And then it would be a decision, has electric really taken that much of the automobile business over? And if it is, they won't do it. But if it hasn't, and something else we start using gas on, great. They'll buy it right back for cheap money. So
exactly. It's a win-win situation. This 5% is BS. They're going to sell a lot more than 5%, folks.
It would seem to me, right.
It would make sense,
yeah,
right?
Totally.
They want to diversify their economy away from oil. They should sell 100%.
Well, you know, the bottom line is we know when oil was at $100 and $140, that's when they should have been basically pushing as much out as they can and not blowing it.
You had King Abdullah was in charge, and you had a real change in Saudi Arabia when King Salman took over in 2015.
Okay.
And then he appointed his son, the 32-year-old prince. You know, it's a big change in that country.
Yeah.
Modernization.
Yeah, stay right there. Andy and I come right back, folks. Our phone number is 877-927-6648. Dow Industrials are down 44, Nasdaq's up 14, S&Ps are down 11. We're coming right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are down 46. You get the Nasdaq off 15. S&Ps are off 11. We're talking with our man, Mr. Andy Heck. We're talking commodities. We're talking markets. And, of course, don't forget, Andy's got a great program every Tuesday, Thursday, 5 to 6 Eastern Standard Time. And remember, all the programming, folks, you just get right in your cell phone. You go to TFNN.com, hit Tiger TV. Out here today, you got unleaded gas is up 1.7%. You got cotton up 1.6. Crude's up 0.9. Orange juice is down 1.8. You got soybeans off 1. Bottom line is that it's going to be intriguing, Andy, watching the good old dollar again, because
right.
No doubt yesterday the dollar couldn't handle it, man. That went south once again.
the dollar and gold, said a lot after the Fed meeting. The dollar looks very weak to me, and I think it's going down in 2018.
Listen, it's possible if this is ever a large ABC structure down, it's going to be a mind blower, because if it is, folks, it's going to 82, and we're at 93.
I agree with that. I think we'll see that.
Yeah.
Yeah. I mean, it might not be next year, but it's going to head in that direction.
Yeah, well, it's been heading there since last January. So,
yes.
We
got to the highest level since 2002 and then kaput. Meanwhile, you see the differential between palladium and platinum?
What is it? Look at your chart.
It's crazy, Tom. $144.
Really?
$144 discount, platinum under platinum. When are the industrial users going to wake up and start loading up on platinum and getting rid of their palladium? It's a no-brainer.
Yeah.
It's a no-brainer. I mean, they're the same. It's a no-brainer. By the way, the reason they use palladium is because platinum was so much more expensive.
Right. No, absolutely. Right. Absolutely.
But you know what the problem is? In a lot of these companies, the people who do the buying, it's one very, very small part of their job.
Sure.
So it's not like, you got the guy people who are sitting there who are, just concentrating. It's just one of the many raw materials they buy.
Right.
But, there's going to come a point where they're going to all start saying, hey, for $140 cheaper, I could get platinum as opposed to palladium. And by the way, platinum is denser. It has a higher resistance to heat. It's a no-brainer.
I think that what they have to do is they have to change the part structure also, right? That's what's probably happening, right?
Yeah.
Because when the cars went from palladium, they used to always have platinum. I mean, some of them still do. The big diesels still have platinum in the big trucks.
Right.
But I think a lot of the cars now are into palladium,
Right.
And palladium, folks, if you put both in your hand, you don't want to throw palladium out. I mean, palladium's soft, it's not good looking. But guess what?
Yeah, it's kind of like aluminum foil.
It is, I know. That's exactly what it's like. It really is.
Yeah. Anyway, meanwhile, copper's doing well.
Yeah.
Copper's been storming back. I kind of like what's going on there. I think, we're looking pretty good in copper. Nice rebound. Copper has been, let's put a weekly chart up here so I could show you what I'm about to talk about. Copper has been a really great performer since making the lows back in January 2016. Let me go even to a monthly chart here. It has not violated the low once. And we actually came close a couple of weeks ago. We got down to $1.9355, right? But the most recent low, the real key support here is 287.50. Now we got down to 292.05. But now, look, we're well over $3 again.
Yep.
And it's just been a technical dream in terms of, it did not look good when it was down at the 295 level on March futures. But I have to, my hat's off to this thing. It looks like it's going to go and make a new high.
So we got the WASD report too, right?
Yes. Talk about that a little. So the WASD was pretty bearish for grains.
Was it?
But, yeah, the bottom line, same thing. Higher demand, but higher stocks and higher production.
Wow.
That went all of them. The corn, the soybeans, the wheat,
So we just keep producing more. The world just keeps producing more, right?
Well, Mother Nature keeps cooperating. Very interesting. So we'll look back. The last time we had like a real run was in
I can bring it up. If I'll bring the corn chart up, all right?
Yeah.
Because they can see it in corn. I was looking at this morning. Corn was at, what, $12 a bushel in 2012, I think.
Oh, 840.
840, that's right, 840, yeah.
840. But the really interesting thing about corn, Tom, if you look really far back, this thing has made higher lows since 1999.
Okay, yeah, I got it back to 1993 right now. Okay.
It has made higher lows since and that's the demand side, okay?
Now, you know what's cool about this now? This is pretty cool, man, you brought this up, because we know that there's more people, right?
Right.
So the closer that you get to the bottom on a commodity, folks, then, the production cost is out there. So I don't know what the production cost in corn right now, but if you did a half-hour worth of work, you'd know what the production cost was. And that's what people love trading commodities, because it can go under the production cost, but only for so long. So that's where you start doing your positions and rolling them. Yeah.
So it's not just corn. It's wheat. Wheat, the same thing if you look at that long-term chart. 1999, the last low. Soybeans, the same thing. So here's the deal with these things. The deal is we've had 5 straight years of bumper crops.
Yeah.
And we're still making higher lows. In June 2000, I think it was May 2016, we had a palm oil shortage, caused soybeans to shoot up briefly. Corn and wheat followed, right? Then they collapsed because we had a bumper year in 2016.
Okay.
This year, we had a drought scare in the Dakotas and in Montana for the wheat market. And corn and beans followed at the beginning of the summer in early July. And, of course, we had another bumper crop, so they all came down.
Yeah, these charts look the same, the wheat and corn chart. Yeah,
right. The bottom line is that this demand is steady, and it is just a matter of time until we get a lower crop yield. So this is the time of the year to start adding to those positions. You know, I think I think the downside is very limited in all of these grains. The upside is potentially explosive, but it's got to be in a year where Mother Nature doesn't cooperate.
Yeah, you're talking a weather market, right?
Weather market. It's always the weather. By the way, Tom, it's always the supply side that causes the spike, not the demand side.
Okay. Okay.
That's the commodity thing. The other thing is out of the WASDE, the one commodity that was bullish out of the WASDE was the cotton. They said that demand was higher. They said that supplies were lower and global inventories were lower. And look what that's doing today, 75 cents again.
Yeah. Hey, and before I lose you here, cocoa finger. Look at that cotton. Yeah, that cotton moved, man.
Cotton moved, and cocoa went the other way. But you know what? I think cocoa is probably in the buy zone again down here.
No, but you know what I'm talking about? The guy that's called Cocoa Finger, he's closing his fund.
Oh, Amajaro? I didn't see that. He used to be a Phillip Brothers guy.
Yeah, and what he's saying is that he's had a tough time making money because of the computers. How's that? Isn't that crazy?
Oh, that's surprising because he's big in the physical business.
I know.
I think he got crushed when the pound came down.
Yeah.
And I think he got crushed.
Because that hurt a lot of people when that pound came down.
Yes.
Yeah.
It hurt a lot of people in the cocoa market.
Right, unreal. Listen, folks, right here, 5 o'clock tonight, 5 to 6. Remember, no matter where you are, just hit TFNN right on your browser. Go to Tiger TV. Andy, have a great one, a safe one. Look forward to the show, hour and 20 minutes.
Thanks, Tom.
Thanks, man. Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 13. S&Ps are off 8. And someone would just put a little juice inside the Dow. It's probably Disney. We're just down 50. Let me go over to Disney and just look at Disney for a second, because Disney has been, no, it's not Disney. We'll see. I'm just popped inside that Dow. So, yeah, but you get Boeing, too. Disney's putting 22 positive points, Boeing 19. Well, we're down 50. We're only down 16 right now. We get over and we take a look at those S&Ps. Yeah, E-mini right now, we just went from 26.54. Yeah, you get some nice volatility here, man. We're getting volatility in this marketplace. It doesn't seem it when you look at the numbers, folks, but from highs to lows, we're starting to get some action. Highs out here today, you get a 19-point spread in the S&Ps. The high out here was 26.73. 26.54 has been a low. And what it just did is that this is pretty cool. It just went back up to where we spiked down from at 20 past 2. That's when it spiked down from 26.61 to 26.54. It did that in about a heartbeat. What's going to be intriguing here, it's hard to comprehend and tell, what's throwing the spikes in it. It's possible that, so what's happening as the markets are open, the tax bill is trying to get through, and what you have as of 3/14, is it 3? It's 3:40 right now. So Rubio, let's see, Trump. This just came across. Trump says very sure Rubio will vote yes in the tax debate update. So what you have here is that, let's see, his quote, Trump's quote is, I think Senator Rubio will be there, Trump said during a White House event about the administration's broad deregulation plans. Rubio said he wants more than the 1,100 credit worth, no. Rubio said he wants more than the 1,100 worth of expanded tax child credit to be refundable, a measure that would mean larger benefits for working-class parents. He and Senator Mike Lee, Utah Republican, proposed such an expansion earlier this month to be paid by increasing the proposed corporate tax rate less than 1% at this point, but their colleagues rejected that provision. Lee is currently undecided on the tax legislation, his office said. He continues to work to make the CTC as beneficial as possible for the American working families. Republican Senator Marco Rubio said he intends to vote against the Republican tax legislation as written unless the refundable portion of the child tax credit rises from $1,100, throwing a wrench into the conference negotiations. His quote is, I want to see the refundable portion of the child tax credit increased, the Florida Republicans said Thursday. If it stays at $1,100, I'm a no. Rubio and Mike Lee have proposed expanding the credit to make more of it refundable against payroll taxes, a change that would help more working-class families. Republicans, of course, they have that narrow majority. Let's see, they passed the initial legislation with 51 votes. Losing Rubio's support would still allow them to pass the final legislation, but it would mean that Senate leaders could lose no others. Yeah, we'll see where this whole thing shakes out coming in. But I suspect as we come into even next week, bottom line is that, you know, there's going to be that going back and forth. And, yeah, there's no doubt, as our man Dave White says, yeah, wet my beak. Yeah, this is, you know what's amazing, folks? For votes, when you really get down to it and you look at it, it is unbelievable how much we are paying, you and I, in taxes for these votes. I mean, it's some of it's like hundreds of millions of dollars. I mean, it's like, yeah, they give this person that, this person that, this person that. And bottom line is that pretty sick. The power is pretty amazing. I mean, that when you look at the power structure, it's insane. But bottom line, yeah, they're going to have to pay him off with something. We'll see whether it's going to be the child tax credit or he's looking for something else. 877-927-6648. Let's go take a look at the good old Walmart. So the closer that we get to the end of the year, holidays are here. We're going to start getting these numbers in. Right now, Walmart's not backing off this high, $97.39. We put this back, and it has the juice up there. Amazon's firing on all the cylinders. Amazon's up 12 bucks. We pull this back. It's been a one-way trade in Amazon. I mean, Amazon, if we go back to 2014, it's 284. We're dealing right now with 1176, and it's got some juice up there. Google, if you notice, you know it's going to be huge this year, folks. Google is up 8 bucks. You're at 1,048. You can see just about every store that you go in has the whole home security, lights on, lights off camera. You know, I was in Best Buy, and the way Best Buy is set up now, you know, it's pretty cool. In fact, let's look at that. Let me look at that. I've never seen Best Buy so busy. So Best Buy is trading $63.97. Numbers. Look at that. The numbers still aren't even close to 2013, but they've straightened it out. They're pulling in money now. Look. So check this out. This is pretty cool. And in 2013, folks, right? Best Buy grossed $49 billion. They are grossing $10 billion less. But that being said, to their bottom line, they're making 50% more. How's that? In 2013, they made $2.62. This year, $3.56. Big number. And what they got rid of some of their big dogs, no doubt. And those stores now are jammed. There's only like one portion of the store that I can see that is not still taking in money, and it looks to me like, you know, they still got tapes, and you know, some of these appliances, I don't think they get they're not really doing the bread on the appliances. So they still, I'd say a quarter of their store is still, you know, per square foot, because that's how that gets done. It's still not there. But you know, chart-wise, yeah, this took out the 2006 highs, and it has action. So to get back to the aspect of what I was talking about, so they have all these home setups, security cameras, lights. They have Nest going. They have Vivid going. They have just about everyone has a, you know, home camera security and all that. And what they also have is this. This is what, you know, if you remember that the phone companies, they would sub out at Best Buy. Now the security companies are subbing out at Best Buy. So I go from Best Buy last week. I'm in Home Depot last night. You walk in Home Depot now, and as soon as you walk in, I don't know if every store is like this, but I suspect they're going to, on your left-hand side, first off, you get all the tools for Christmas, right? Then, about 10 feet away from that, same type of setup. So what you're going to see is that we're going to see the we're going to see those numbers coming out, and those numbers are going to be coming out, by the way. Google the big Nest deal. I don't think Vivid is public. They got quite a system going, and they're all interlaced. You stay right there, folks. We come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Welcome back, folks. Dow right now is down 51. You get the NASDAQ off 18. S&Ps are off 12.5. What's intriguing here, folks, is that, you know, we jumped around quite a bit from the last 60 minutes. And the NQH8, I got to get used to 18. This 2604, it just seems to be a magnet inside the index 100 today. The first time we got down there, you had the juice down there. You got to 07. Next time you came down to 04. You're at 12 right now. We'll see where this shakes out. What we are going to have is that after the close, we are going to have some action out here because we got you got Costco, Oracle, Adobe, and J-Bill after the bell. That's going to be cool. ORCL. Let's look at Oracle first. Oracle, yeah, Oracle doesn't look like it has any juice. Adobe, ADBE. Now this stock got smoked last time, I believe. Oh no, it's Adobe's at highs. Okay, 1 second, hold on. No, Adobe's at highs. So, yeah, Adobe can, well, that leg down last week, at a high volume low. Adobe could flatten out kind of where it's at. Oracle, however, doesn't look like it wants higher price. We go to Costco. Let's see what we have with Costco out here. So Costco's trading down $1.25. I believe this thing's laying out at highs, though. Yeah, this is laying out at highs. Let's see. Yeah, but that was light volume when we got up over there. So it doesn't look to me like Costco's going to take off. The larger problem, I suspect, could be Oracle. You know, the other two look like they're going to be fine. Oracle, last time, I think this is probably numbers, that gapped September, October, November. No, that gapped from 53 down to 47. You stay right there, folks. We'll be coming back with some numbers for you. Dow Industrials right now are down 47. NASDAQ is off 16. S&P's off 12. Gold's up 580. We're coming right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you?
I'm doing great. How you been, man?
Not bad. You know, you guys, over the time and with a few of your courses and seminars, you know, you taught me how to fish.
That's a beautiful thing, brother.
Yeah, it's true. And so what happens is I still listen all the time, and to not only you, but some of the others.
Sure.
To, you know, get an idea where the fish might be biting. As far as your services, they're a bargain. When you compare them to a certain prominent man with real estate courses at $35,000 and no contact with the lecturers afterwards at all, and you think of what you guys do for a few hundred, and you can get access and ask questions forever, you know, it's a great deal.
No, no, we appreciate the growling problem with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. December 14th. Pretty amazing, folks. This is fast and furious coming into the end of 2017. To begin a great relationship, know what you want. Know what the needs of your body are, what the needs of your mind are, what fits well with you. There are millions of men and women. Some of them make a good match for you and others won't. The two of you only need to be like a what? A key and a lock. A match that works. Market-wise, let's take a look at it out here. We had the Dow Industrials down 76. NASDAQ off 19. S&P's down 13. Percentage-wise, folks, what we had out here is this. You had the Dow Industrials down 0.3%. S&P's off 0.3. NASDAQ off 0.3. No big numbers. Gold contract. What do we have with the gold contract? Gold contract traded up $6.50. $12.55.40 an ounce. Silver up 5 cents. $15.92. We go over to that gold contract. You take a look at gold. What you have with gold is this, folks. Yesterday, wide price spread, accelerated volume. Today, rejection of lower price, light volume on the pullback, beautiful thing. So now what we're doing is that we're pushing into the downdraft that had been created out there on December 7th. That downdraft had 323,000 contracts. Yesterday we did 324. Today you're pushing with 251. Decent setup. Gold is building cause to get back inside the higher range. That higher range is approximately 1273. That's where that shakes out. Silver, same type of setup in silver. What we have with the silver market out here, whoa, well, that's interesting. I like how that's set up. Pretty cool. I just hit a different button, and I hadn't seen that set up for a while. Silver setup, we take a look at silver. What you have with the silver market, that also came off the lows yesterday. Came off the lows, had volume off those lows. That also wants higher price. Now, notes and bonds are pretty amazing, folks, okay? So, yesterday you had the Fed go up on short-term rates. And short-term rates, by the way, are bank-to-bank rates. That's the rate that the Fed controls. So, what normally happens as the short-term rate goes up, you see the 2-year go up, the 5, the 10, the 30, right? That's what the yield curve's all about. You know, they can control the bank-to-bank rate. That's all they can control. The market controls everything else. Bottom line, they go up 25 basis points. Guess what? The 10-year yield, the 10-year note goes up almost a full point. Today, it rejected lower price. 10-year wants higher price, number one. We're at 124.16. 125.06 is game. The yield on the 10-year right now, when we take a look at it for the whole past year, we are right in the middle of the range. The low for the year was 2%. The high is 2.6. We're at 2.3. The 30-year, we take a look at the 30-year. The 30-year is really amazing because the 30-year is leading the 10-year. And the 30-year is getting cheaper also. The 30-year blew away its swing points yesterday. Huge volume. Today, continued higher. 30 years trading 154.04. The swing points were 153.21. What you have happening here, which is amazing, is that the 30-year wants to run to 156.14, which was the high of September. Now, if we take a look at the 30-year and we put the 30-year on a continuous contract, what you're going to see is this. I'm going to bring this back a bit so you can see the larger picture. So the larger picture, the lows of our interest rates, period, were July of 2016. So we're in December of 2017, right? We've been building cause and consolidating since the downdraft of November of 2016, so approximately a year. The bottom of that is 155. So that's where we are right now. The top is 164. What's going to be intriguing here is to see, you know, number one, can this consolidation get up and over the top of the consolidation, which is 157.28. My take right now is that we're going to run to it anyway. You take that out, and that's saying that, guess what? These rates, there's something that's laying out here, and these rates are going down. Again. And when you take a look at the 30-year, which is amazing, the 30-year, folks, has not broke. You talk about higher lows. The 30-year has not broke a swing point since 1999. Yeah, 1999, we're 2017. So it's pretty intense. And in order to do that, the 30-year would have to get down to 147. We're a long way away from 147 right now. We weren't. You know, when we came down, it looked like it was going to break it again. The bottom line, the bond market in general has teased many folks over the last 5 years that it was going to break down. The last time we did come down, we got down to 149.08. You had to get under 147 in order to have a breakdown, and guess what? Market said, see ya, don't want to be ya. We go over to King Dollar. King Dollar also having a tough time holding higher price. And when you put together, by the way, King Dollar and the bonds, it's like, okay, so King Dollar very well could be doing a very large ABC structure down. If that's what we have, and, you know, when I'm talking about a very large ABC structure down, you'd be talking about the aspect that, I'm going to bring this up, we're at 93.60 right now. The high of the year was January 3rd. That was 103. That 103, by the way, that did, let's go take a look at this, because I'm bringing this back to 2002. So let's just, I'm curious of what kind of retracement we actually did on that. So we had done just over a 0.618 retracement of the whole move, meaning that the highs of the dollar were 2002. The lows of the dollar were 2008. The counter trend bounce that we did, which went to January 3rd, was just over 0.618. Now, when you do over a 0.618, that's saying, number one, that you had a strong counter bounce, and we did. It's also saying that you won't go break out the lows. Because we come down so fast, you can very well have an ABC down. If we have an ABC down, that's going to be to 82. Now, we go to 82, the U.S. dollar. That is saying the metals are going to go to the moon. What it's also saying, though, which is kind of intriguing, is that why is the dollar getting so weak? You stay right there, folks. Coming back with our man, Mr. Basil Chapman. Dow Industrials finished down 76. NASDAQ off 19. S&P's off 12. We're coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And folks, if you want to see something how Bitcoin mania is going to be jumping from sector to sector to sector, I want to thank our man, Mr. Dave White, for putting this in the den. Seabird Financial. If you remember that I think Marion Seabird, she was the first woman that ever had a exchange seat on the NYSE. And this equity today jumped $6.67. So it jumped like up over 129%. And guess what? All they did is that, here, if I bring this back for a second, you see they don't make any money. Well, they take in all of $9 million bucks. They have 31 employees. The bottom line is that what they did do, and this is all about story. And the story out here today is that the discount trading will be available in the first quarter. They just made a partnership with Overstock. And what this is going to be, the rollout of new products and services such as blockchain technology, crypto products, and robo-advisory. Bottom line, this is going to be a field day, going from sector to sector to sector. Pretty crazy. Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday and Thursday. In this case, this is at 20 past the second hour. And don't forget, folks, every trading day, noon to 1 Eastern Standard Time. Basil's got a great show. You can call in, talk to him. He also has a great newsletter. It's the opening call, and the way you get the opening call, you come over to our website at TFNN, and as you come over here, you go under newsletters. You're going to go under trading newsletters. Right there at newsletters, you're going to trading newsletters. You'll see the opening call. You hit that opening call. You can test drive the opening call, 30 days, absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great, man. How about that Seabird company, huh? Holy cow.
Yeah, so that was Muriel Seabird, and
yeah.
She's not alive anymore, is she?
I don't believe so, no.
I don't think so. And she was she was an ice cutter. She just barged in, and she was a very serious person. Yeah. She came in. It was an all-men's club. I remember when she used to be interviewed by
yes.
Rukeyser on Wall Street Week.
I believe she had the first. She had the first seat. I believe first seat for a woman on the NYSE, folks. So it was a
real
cool
big
deal.
Achievement.
Yeah, big time.
Absolutely, yeah. So I wonder what she'd be thinking now. I mean, this is a new age completely. Right?
Oh man. You know, the thing that's pretty wild, man, is that for a stock, this is the type of financial markets that we're in right now, folks, that a stock can jump. If you want to see something crazy about this stock normally trades like 1,000 shares a day. Look at this. Look at these numbers: 3,000, 17,000, 6,500. You know, this trades.
They had to book an appointment to buy the stock.
Exactly. And today, folks, it did 4 million shares.
That is unbelievable. You know, this is very interesting. So let me jump a couple of steps here. First of all, let me just show you in the Chapman wave, I look for the most identifiable lowest low. We try to count each successively higher peak. We try to get to the fourth highest peak, alphabetize them, uppercase A, B, C, D. You can go higher than that, but D is where other things can happen. Then the next slide I wanted to show you was this, and it goes exactly to what we're talking about now. I'm going to be the guest speaker right here. This is at the Boston Investors Group holiday party meeting this coming Monday night.
Oh, cool.
The 18th. Yeah, 6:30 to 7:30 is a potluck reception. If anyone wants to come, if they want to bring something, that's fine. Some soda, whatever it is. And there's networking going on between 6:30 and 7:30. So this is for the Investors Business Daily group, plus the Boston Investors Group. And so it's going to be a lot of fun. I've been fortunate enough to
So it's building number E51, right?
And this is the MIT building, E51, room 335, 70 Memorial Drive.
And it's right, it's easy to get to, folks. I remember this. It's right on Memorial Drive. When you go and you just, right to, you know, actually it's a one-way that way. So you just,
Well, they might be doing some road work, whatever, but if you've got enough time, you'll be able to get there.
Yes.
So what's very interesting is, so you're talking about, when I was there last, I guess it was late August, I was a guest speaker there, and I discussed the Bitcoin, and I discussed, at the time, all I had there was the GBTC, which is the Bitcoin, the fund, essentially.
Yes, the trust.
Which trades just 9:30 to 4. It's, I mean, between the evening session, you could have an entire year's worth of trading. But I mentioned, and I said, this is going to be something you're going to hear more and more about, because just as the Dow back in 2000 lost its priority, its 100-year priority of being the leader, because the NASDAQ became the most desirable area to be in, and you had the grandmothers who, you know, you talk about the safety of bonds. That's what they always used to. It was kind of an expression. If you wanted to be, you know, if you wanted to keep your portfolio and you were retired, you kind of looked at bonds, and they talked about the safety of bonds. And we saw family members taking, elderly members taking their very secure money and putting into AOL and all those stocks.
Yeah.
I mean, the fervor was so intense.
Right.
So in 2005 into 2007, that was the same thing. You remember how you and I were looking at those home builders? And they just kept going higher and higher until we finally got it. When the top came, it was real quick and very sharp, 80-something% decline in the HGX. So I've been looking at this and saying, what could be a catalyst to bring the public in, and the millennials especially, because they are kind of in the market, but this is exactly, you got your cell phone. This appeals to, I know a number of young people who are already in the Bitcoin area.
Yes.
And so slowly but surely, you know how it was, young people wore denims, and now all of a sudden you walk around and elderly folks are wearing denims. So this is the same thing with the cell phones producing this incredible, not just cell phone, but the technology, this incredible medium. And it's just going to bring people. I asked before the Thanksgiving weekend, I said in my newsletter and as well as on air, I said, tell me if anyone spoke about stocks during the Thanksgiving, don't bring it up. Let somebody else bring it up. Has anybody brought it? I got maybe two emails saying, yes, people brought it up.
Okay.
Otherwise, it was quiet. But there were people talking about Bitcoin.
Yes.
So this is not anything to be ignored. This is going to be serious, and I think it's going to take away a lot of money that could be going into stocks, and we've got to keep that in mind that the fervor is going to be quite intense. So I just thought I'd bring that up, and then I want to show the chart. Because I think
that money could just vanish.
Yeah, they just don't understand how quickly things can happen, right? But I mean, people do make money, and so that's fine.
Listen, there's been a fortune made. There's no doubt.
Absolutely,
It's you know, I mean, if you believe what they're saying, though, that 100 people own 40% of the Bitcoin. So
as well as a lot of people that have it in the pennies and the dollars. I mean,
right.
So that adds to the fervor when people hear that someone had paid $1,000, and it's well. So anyway, I want you to just show the Dow chart right here, because I think on a short-term basis, I got all the requirements I need now, at least for a shorter-term pullback in leg E in the Dow. I had shown that chart that says goes to D. Well, this went to the E, and this is the same chart. It shows the MACD still very good.
Yeah, Basil, just stay with us a second. We'll be right back, all right?
Sure.
Stay right there. Basil and I come right back, folks. You had the Dow Industrials finished down 76. NASDAQ was off 19. S&P's down 13. We had gold up 620. Silver was up 5 cents. We'll come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with our man, Mr. Basil Chapman. We are talking the markets. And in the markets out here today, folks, let's go take a look at Oracle. Just come out with numbers. So Oracle closed at $50.19. That's trading $48.10 right now. The estimate was $9.75 billion in revenue. They did $9.63. Bottom line is that on both sides, they did the numbers, but the market is selling it off. Costco just come out with numbers also. Costco closed at 186.53. That's trading 187.85. And numbers go like this in Costco. The estimate was $1.34. They made $1.45. So they come in with some big numbers. Back to our man, Mr. Basil Chapman. Okay, so we're looking at...
we're looking at the Dow daily. This is the same chart on the left as on the right.
Yep.
The one on the left is doesn't have the MACD, stochastic, and all those other technical indicators.
Okay.
It does have the 9-period moving average, the blue line here, and right down here is the 20-period moving average. So this is very interesting because based on the work that I do, this is saying that there's a chance that we could go into this rectangle formation right here, and that's kind of between 24,100, 24,000. And the upside at this point, I think, is a little bit limited based on the fact that the MACD is starting to flatten out and the stochastics pulling back, and the on-balance volume actually turned down quite sharply here. So I thought, and you know, I look at the rudder. The rudder is the shorter term. In this case, it's the 120-minute chart. And they gave me a sell signal to a sell mode at the close. So this has made a peak F at 24,672. So the green line here, this is the 20-period moving average in the 120-minute chart, and that's got 24,475 as a potential target. If it starts to go under that, we could fill the gap that we had just, 2 days, yesterday.
Yeah,
2 days ago.
Let me ask you something. If you do the 20, I mean, if you go to the 50, that's down. The 50-day moving average, folks, because we're going up so dramatically, is down 2,000 points.
It would fill in quite a few gaps.
Yeah.
Now, it's very interesting that, yes, a party that had the presidency, it had both houses, and it's difficult. Even now, we don't really know how the tax bill is going to come out. There are a lot of cross currents. So it should have been a layup, and now it's kind of more difficult.
Right.
So the way I'm looking at it now is that the market is saying, at least in this very short term, perhaps the spikes to the upside are going to be a little less frequent. We have to wait. It's going to take a lot more convincing to say, yeah, things are going through. When it does go through, then we have to assess. It's a whole new ball game completely. So I just thought I wanted to show you just on a shorter term what we'll look at. I've been waiting, and now we finally got a short position. We do have, for some subscribers, we still long from 22,300 in the Dow in a position there. That is like an intermediate term. I'd like to just leave that and have shorter term trading positions. So I thought I'd just go through that because we're at a very important period. We've actually built up a nice cash position. And you had mentioned something very interesting just a short while ago. You mentioned the yields. So if you look at the yields, the white is the 30-year yield, the brown is the 10-year, and the cyan is the 5-year. That went to a leg D. Look how tight that is.
Yeah.
Had a great call this morning from one of our tigers that's was always in the den and always asks great questions. And the question was the relationship of this to the 2006 period. So I've done something. I'm not going to do it now, but on my show tomorrow at noon, I'm going to discuss. This is 2005. There was really a different. Look at the big. Even though the yields got very close together, the 30, the 10, and the 5, this is different. This is the flattening that you got to be a little careful of. So I'll be writing about this for subscribers overnight, and then I'll discuss some of it tomorrow during my show at noon, because there are some implications here, and that's why I'm rather intrigued to see, does gold follow through on the upside? We are still long the dollar from the exact day of the low on September the 8th, but at the same time, you're making some very good points. That was a big move yesterday, and it kind of held today. So we're going to see a big tussle between dollar and gold coming up in the next over the next week, I think.
Yeah, you can see that. There's no doubt. And listen, folks, so you can come over to our website at TFNN. You go to newsletters. You go to trading newsletters. You can test drive Basil's newsletter 30 days absolutely free. That's the opening call. And, of course, don't forget, every trading day right here, noon to 1 Eastern Standard Time. And no matter where you are in this great world of ours, folks, remember, just go to TFNN. hit Tiger TV, and you're going to get some great HD quality video as well as audio. Thanks so much, Basil. You have a great one, a safe one. Of course, look forward to the show tomorrow.
Thank you very much, Tom. Have a great evening.
You too. And tomorrow, folks, we have quad witching, okay? So you are going to get some real action out here, volume-wise and price-wise. Let's go over to Adobe. Adobe come out with numbers, folks. Adobe closed at 175. It's trading 177.40 right now. It had closed down $1.80. It's getting that back at $1.80 right back. Let's see what Adobe has to say here. So, okay, the revenue estimate had been $1.95 billion. They made $2.01 billion. The earnings estimate was $1.16. They made $1.26. So, bottom line is that they did the numbers pretty easily. Let's bring this back. So we'll see how this whole thing shakes out. For the year, I see the year they're basically saying that it's going to be the same estimate. They were at 550 for earnings. They're still at 550. Their cloud revenue is $550 million. Their digital reoccurring revenue is $5.23 billion. Imagine that, folks, $5.23 billion reoccurring revenue. And, you know, Adobe, when they had done that, they had taken a hit. You know, we always, you know, we, of course, buy Adobe products, right? And then they went online. Bottom line, we all went for it. That's how that shakes out. Their creative revenue is 1.16. Their media revenue is 1.3. All in the billions. The first quarter coming out, the next quarter, they had an estimate of 2.04. They think they're still going to do that. And their full year revenue is coming in the same, which is $8.7 billion. We bring this back. I believe this is still hanging at all-time highs. Yeah, it is. You know, we're up here. The all-time high is 186. Right now, you're at 180. So, bottom line, it is hanging up there. We go over and we take a look at good old Bitcoin. So, Bitcoin out here today, folks, had a high of 17,122, a low of 16,060, and what we also have out here. Now, we get a new Bitcoin that start trading out here. This thing's been going all over the place. It's called Ripple. Ripple yesterday, let me see this thing today. So let me see how I can get this chart up. This is pretty amazing. So it looks to me like, I believe this is at 85 cents. So what Bloomberg has done, Bloomberg got 5 of them up here now. We got Litecoin, Ethereum, Ripple, well, 4 of them. Yeah, we get Bitcoin, and then we get the Bitcoin last trade at the CBOE. What we are going to have, so the last trade at the CBOE right now was 16,800. This Ripple, you can expect, is going to, whatever this is, we'll try to find out what this is for you. Ripple currency, that's what they're calling it. That's at 0.85 cents. So that, you know, you're talking about 0.85 cents, you know what that can do, right? You know, bottom line, we'd all love to buy something at 0.85 cents, even if it is a bubble and you think it's going to go to $10, $20, $100, $1,000. Stay right there, folks.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow Industrials down 76. You get the Nasdaq off 19. S&P's down 16. Let's go take a look at those S&Ps. So S&P's are coming into the close out here, folks. They did a little destruction. That leg down, pretty good. We had a high out here today of 26.73, $20 down. You're at 26.53. We take a look at this, and what you're going to have, this has a shot. This is going to be really intriguing. So 2 weeks ago tomorrow, that is when the S&P and the market itself had that huge downdraft. Bottom line is that it came back good, but you had a downdraft. We went from 26.52 to 26.06. You came back to 26.46 at the end of the day. That being said, what you had, those are all high volume lows, so they want to be tested. We have option expiration. We have quad witching tomorrow, which bottom line is going to be a lot of squaring of positions, particularly because, well, at the end of the year, you always have squaring of positions. The option traders, there's plenty of people that are hedged inside the option market. They're going to square positions. Now, the real key are that none of us actually know, because we still don't know because the tax bill is not out here, is that will they be selling? Will they not be selling? What are you going to do? Who's going to take what off the table? So the volatility is going to be out here. Because when we actually look at the aspect of the tax bill itself, what we all have to figure out is, do you really want to get paid at the end of this year? Why not put it off to January 1st? Because if the bottom line is that these rates are going to go down pretty dramatically. That's on a pay scale. On a equity scale, there's so many moving pieces on an equity scale. It's there's not one way that you can just really figure it out, unless I'm sure that people with portfolios are going to figure out what's best for them, and that's my point more than anything. What's going to happen is that different portfolios are going to have different ways that they want to deal with this, because what is going to happen at the beginning of the year is that it's going to be that you can't. First in is going to be first outsold, right? So right now, folks, the way that the structure is, the regulation when we're owning stocks, is that, let's picture, one of the best ones to look at would be Apple, because if we take a look at Apple, There's people that have owned Apple for a long period of time. Let's just put it up. I'm going to put it up on like a 15-year chart, all right? So when you take a look at Apple, let's go back. We'll just say 2008, right? So what happens is this, is that the way this tax rule is structured right now, let's say that, you know, you loved Apple, you get in, right? You get in $12, $20, whatever that is. Well, what folks like to do in a building portfolio, you know, you buy 100 shares now, you buy 100 shares a year from now, 100 shares a year from now, 100 shares a year from now. So now we're talking 10 years, right? Well, what happens is that when you're selling that equity, and you're going to pay a capital gains, and the capital gains is cheap money anyway, okay? But bottom line is this, is that let's say that you had a loss on one side. Let's say, I'm going to make this kind of, you know, easy. So let's just say that we invested $1,000 in Apple, right, in 2008, and then every year we invested $1,000, and every year, you know, well, every year the stock did go up. So watch what happens, is that, so in this particular case, the $1,000 in 2008, right? Bottom line, right now, that's going to be worth like $15,000, right? You invested $1,000 last year, and let's say that if we take a look at it last year, so last year, January 1st, okay, good, we're at $108. So you still make $1,000. That would be worth $1,700, okay? So let's say you had a $1,700 loss, and then you want to match that out. Okay, so you can match that out, and you can tell the IRS, I sold the 100 shares, but the $1,000 worth of shares, no, I sold $1,000 worth of shares, but the 1,000 I sold is the shares that I actually bought this year, December of 2016, okay? You're not going to be able to do that January 1st. What's going to happen on January 1st is that the first shares that you bought, going all the way back to 2008, is the shares that are going to get taxed. Now, that's a huge difference. Now, you're talking about a tax bill of $17,000 versus the aspect, actually, it's more than $17,000. You can get the gist of it, though. There's folks that have owned stock for a long period of time, and you're not going to have the choice. So if you are close and you think you might be selling it, what more than likely, I suspect, you know, could be done is that people are going to be trying to take, what I would be doing, I'd be trying to take as many losses as I could find, okay, on this side of the ledger. Then on the other side of the ledger, you're looking for every piece of stock that you have had for a long period of time. Like in my case, I'm not going to sell it. In my case, I still have a stock that my mother gave me in AT&T, and I actually get these certificates. My kids will end up having them. But if I was going to do something, that would be the one, right? Because, I mean, it's so old, it's insane. But so you can get the gist of it. And there is definitely, that's probably going to put some volatility inside the marketplace. And, you know, we'll find out how that shakes out. Because the other side of that, now, so picture this. Even that being said, the tax bill still isn't there yet. So I suspect in the next 3 or 4 days, they're going to get this thing straightened out. Once it comes down and it gets signed, then everyone's going to know that, okay, what's in it? We're going to know somewhat what's in it. Some of those big things that I just talked about, I do expect we're going to know. And so the scramble will come at the very end of the year. You know, right now, we got Quad Witch and Friday. You come back to work December 18th. We got, yeah, it's going to be next week. Well, we get next week, and then we get the week after Christmas. But there's going to be some scrambling here. And there's going to be, and I suspect that what you'd be looking at, it's going to be some of the high, powerful stocks, too. Like we go to Boeing. Well, watch. You go to Boeing, I mean, if you're sitting with Boeing, right, $31 to $293, there's going to be a lot of, you know, hand-wringing over that. You know, you don't have to sell it. That's not my point. The point is that if folks thought they were going to sell it sometime in 2018, I expect that would accelerate up so that you could plan it, because you're not going to have a choice on 2018. That's how that shakes out. So, and then of course what we are also going to have is that the we'll see what the implications are for the amount of taxes that the larger companies that are going to repatriate dollars back to the U.S. Have to actually pay in. Because what is going to happen, they're going to, whether they take the money and bring it back to the U.S. or not, the bottom line, they're going to get taxed on it. They can pay that tax, though. There's a kicker in there for them. They can pay that tax over 8 years. That's how that's going to work. You stay right there, folks. We'll be coming right back. Dow Industrial's down 76. NASDAQ is down 19. S&P's off 15.5. We're coming right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. The Dow Industrials finished down at 76. You had the NASDAQ off 19, S&P's off 15.5. Let's go over and we take a look at, say, a couple of the numbers that came out after the close. You had Oracle come out with numbers. Oracle closed at 50, trading 48 right now. Oracle, bottom line, made its numbers, but you know, this equity looks weak. You know, this came down hard in September. Went from 53 to 48. Just can't seem to handle it. At the bottom of that consolidation is at 47, so I expect that's going to get tested. Costco came out with numbers. Costco closed at 186. 53, that's trading at 185. that baby is hanging up at these highs. Bottom line is that I think it's going to stay at these highs too. Adobe also come out with numbers. Adobe closed at 175. That's trading 187. JBill, let's see if JBill come out yet. JBill closed at 27.45. Yeah, that come out. That's trading 28.40. Let's see what JBill had to say. Okay, so numbers go like this. Net revenue, the estimate was $5.5 billion, it did 5.6. Earnings per share, 78 cents, did 80 cents. So bottom line is that beat bottom and top line. This is one of the largest subcontractors in the tech space in the world, really. You know, bottom line is that the equity no doubt recovered since 2009. It was at $3. You're at 27 right now. Still has a lot more work to do in order to get to a higher price. I would expect you're going to see out here tonight, folks, you're going to get some high volatility in the Asian markets and the European markets. It looks to me like option expiration is going to be problematic and volatile inside these markets, because what you have is that we have those high volume lows that are laying out there, particularly the small caps. In fact, yeah, the IWM went down 120, 168. We're at 150. That 148.75 is basically sticking out there. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Have a great night, safe night. Stay right there. Andy's coming right up, folks. Wow! Go get him, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.